takes on the reaction to these aftershocks for the Kiwi?
Yeah, well, I guess the market reaction wasn't a great surprise with the New Zealand dollar coming under selling pressure. We certainly can see the New Zealand dollar probably in the near term continue to weaken, probably probe or test below the 81 level against the US dollar, maybe get down towards the 80.50 level. But we still think the case for the New Zealand dollar is a bit more positive over the more medium term. Certainly we've seen some of the data indicators pick up quite noticeably recently. The market is, and ourselves, are generally looking for an interest rate hike towards the end of this year from the RBNZ. So it will all depend on how if continuing aftershocks delay the recovery effort, then that can certainly dampen that outlook. But at this stage, we still think the New Zealand dollar is going to be quite well supported on dips.
And how strong is the case now for the Governor, Alan Bollard, to really not to raise rates until next year?
Well, I think that obviously that we have seen the interest rate market pare back expectations for when they think the market will, or when they think, sorry, the RBNZ will start to tighten policy. We think that this obviously at this stage it remains very uncertain as to what extent the aftershocks, in terms of what impact it has on confidence, etc. So we still think that the case is still there for a December rate hike. The rebuilding efforts will definitely be getting underway. So, and the rest of the economy outside of the Christchurch area is obviously doing quite well at the moment with very accommodative monetary policy and high commodity prices. So we still think there's a case there, but obviously we'll have to wait and see what impact these most recent aftershocks have on consumer confidence and business confidence as well.
What is the best cross-trade play? Is it the Kiwi against the Aussie, or is it the Kiwi against the US, or the yen, or the euro, or the pound? What do you think is personally the best for a trader right now?
Well, I think that the Aussie-Kiwi cross is, I think, a very crowded trade at the moment. We've certainly seen that cross come down quite a way from its highs. We like things like Kiwi-Euro, Kiwi-Yen, etc. I think are getting to more attractive levels for us. The New Zealand economy, despite the tragic circumstances surrounding the earthquake and the continuing aftershocks, is still in a much stronger position than both Japan and the Euro area. So we continue to like buying dips in those types of crosses, and even crosses like Kiwi Canada as well, we think can probably head higher over the medium term, given that the RBNZ is probably likely to be adjusting policy quicker than what the Bank of Canada is, given the growth wobble we've seen in the US economy over recent times.
Jonathan, you mentioned the Kiwi Euro. Now Greece being cut to a triple C, deeper junk they called it, by S&P overnight. How does that therefore change your perspective as a Forex man looking at the Kiwi Euro?
Well, I guess somewhat perversely it could actually take Kiwi Euro lower in the short term, but just from the perspective that if it does create more risk aversion in the market, the New Zealand dollar tends to suffer more during such episodes, even if that source of that risk aversion is coming from Europe itself. But certainly I think it continues to present the European currency with multiple headwinds over the coming period, but we still expect to see the New Zealand dollar outperform the euro currency over a more medium-term basis. So we obviously have risks that the ECB tightens policy at the next meeting in July, but it's certainly, given the sovereign debt issues surrounding Europe at the moment, the ECB is still likely to be fairly cautious raising rates throughout the rest of this year. So that could see the European currency still under pressure in our view, and we certainly want to be buying dips in the Kiwi Euro cross over the next 3 to 6 months.
Jonathan Cavenagh, many thanks for joining us this morning.